Blue Chip Bulletin. Financial market updates and insights.
So let's talk about Walmart. Because whatever you thought you knew about the retail giant, well, it's time for an update. They just had a blockbuster quarter that sent them crashing through a massive milestone, officially joining the Trillion Dollar Club. So what in the world is going on? Today, we are diving deep into their latest earnings report to figure out how Walmart is turning itself from a big box store into a legit tech powerhouse and what it all means for its future.
All right, here's our game plan. We're going to start with those huge headline numbers. Then we'll go under the hood to see what's really driving all this growth. We'll ask the tough questions. Like, is the stock price getting a little too high? We'll explore their big bet on AI, and then we'll look at what's coming down the road to give you the complete picture. Okay, first things first, let's look at the big picture. And trust me, it's big. Walmart didn't just have a good quarter. They delivered a performance that really changes the entire conversation around this company. Let that number sink in for a second. $190.7 billion in revenue in a single quarter. To give you some perspective, that is more than the entire yearly economic output of many countries. This isn't just a store, it's a global economic engine.
And then there's this. This is the number that really made Wall Street sit up and pay attention. An adjusted earnings per share of 74 cents. This proves that all those massive sales aren't just for show, they're turning into real, healthy profits for investors. And here's why the market got so excited. It wasn't just a good report, it was what they call a beat and beat. Analysts expected big numbers, but Walmart came in even higher on both revenue and earnings. When that happens, it sends a really powerful signal that your strategy is working even better than planned.
That amazing quarter was the final push they needed. It propelled Walmart's total value past that historic $1 trillion mark. I mean, welcome to the club. And this isn't just some vanity number. It's the market screaming, "We believe in your transformation."
So the big question is, how? How did they do it? The headlines are great, but the real story, the interesting stuff, is buried in the details. So let's pop the hood and see what's going on.
What we see here is strong performance pretty much across the board. International sales were great, especially in China and Mexico. Sam's Club is getting more shoppers in the door. But look at that key driver for Walmart US. E-commerce grew by 27%. That's not just growth, that's an explosion. It's the real engine behind this whole story.
And this is maybe the most important slide of all. This is a total game changer. See, Walmart isn't just about selling you groceries anymore. A full third of their operating profit now comes from businesses with much higher margins, like selling advertising space on their app and website, or from membership fees like Walmart Plus. That is a fundamental shift in how they make money.
Oh, and it gets even better. For years, the big question for investors was, can they actually make money on e-commerce? Well, we have our answer. For the first time ever, their U.S. online business was profitable for a full year, and the CFO pointed out they're seeing double-digit incremental margins. So what that means is for every extra dollar they bring in online, a nice fat chunk of it is pure profit. It's not a drain anymore, it's a cash machine. So, all this amazing news has sent the stock soaring to all-time highs, which, naturally, leads to the one question that every single investor, new or old, has to ask themselves. Is it too late? Is the stock just too expensive now? You see this number here, the PE ratio? You can just think of it as the hype metric. It tells you how much investors are willing to pay today for every dollar of profit the company is expected to make in the future. And at over 45, well, that is sky high for a retailer. It tells you that people aren't valuing Walmart like a grocery store anymore. They're valuing it like a tech company. And this chart really drives that point home. Look at this. Walmart is now being valued right up there with a premium brand like Costco, and it's left its other peers like Target completely in the dust. The market is basically saying Walmart is in a whole new category. The question is, what category is that? And that brings us to the answer. The only way you can justify that premium price tag is if you stop thinking about Walmart as just a retailer. The entire bull case, the whole argument for the high stock price, is a massive bet that Walmart has successfully turned itself into a real-deal technology company. And it's all powered by AI. The core of this whole strategy is a concept they call Agentic Commerce. Now, it sounds super techy, but the idea is actually brilliant. Instead of you searching for balloons, then cake mix, then candles, you just tell the app, Plan a kid's birthday party, and the AI does all the work for you. It's all about shopping based on what you want to do, not just what you want to buy. And the face of this whole strategy is their new AI assistant Sparky. It's already being built into their apps, and it's not just a concept, it's already making a real, measurable difference. Now you might be thinking this is all just a cool gimmick, right? Well, get this. The company said on their earnings call that people who actually use Sparky are spending, on average, 35% more per order. That's not a gimmick. That is a direct line from their AI bet straight to the bottom line. And this tech revolution isn't just about the app. Behind the scenes, they are completely overhauling their supply chain. We're talking about massive automation, using AI to slash costs, and get this, rolling out drone delivery to most people in major cities. It's all about getting you your stuff faster and cheaper than ever before. Okay, so things are looking fantastic right now. But what's next? What does management expect for the year ahead? Let's take a look at their official forecast and maybe some of the potential bumps in the road. So, management laid out a pretty confident plan for the next fiscal year. And here's the key takeaway. Look at how they expect operating income, that's their profit, to grow faster than their sales. That's them telling us they believe all these investments in higher margin businesses and tech efficiency are really going to pay off. But, it's not a perfectly clear sky. There are a few risks to keep an eye on. First, their earnings forecast was actually a little bit lower than what Wall Street was hoping for. Second, if the economy slows down, their core price-sensitive shoppers could be hurt. And finally, when your stock price is this high, you're priced for perfection. There's just not a lot of room for error. So, after digging through all the numbers, the AI, the risks, what's the bottom line? If you're looking at Walmart stock today, it really comes down to two very different stories, two competing ideas about what this company truly is. This really lays it all out. The bulls, the optimists, see a tech company hiding in plain sight with amazing new ways to make money that justify the high price. But the bears, the skeptics, see a great retailer that's just way too expensive, especially with a shaky economy. The whole investment comes down to which one of those stories you believe. And that leaves us with this one big, fascinating question. Has the biggest, most traditional retailer on the planet actually managed to reinvent itself for the age of AI? The answer to that is going to define not just the future of Walmart, but maybe the entire future of how we shop.